Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon, and today we're going to have our weekly discussion of current market conditions. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. This is my brief bio. You can read it here. Disclosures are very important. Please read them. If you're new to trading stock or options, or you're new to Tradespoon, I would encourage you to visit this link, optionscreening.com, so you can understand the risk associated with trading stock and options. All right, let's take a look at the market and see what to expect. Maybe review the latest code and the latest trades, and answer any questions you might have. So we have some earnings today. Visa announced earnings. So far, it's up 1%. People are spending money. Visa is in strong uptrend, very similar to MasterCard earnings from yesterday as well. Intel kind of fluctuating between gains and losses, gave up most of its gains. We have Microsoft. Yesterday was a pretty sharp decline, more than one standard deviation move, 6%, dropped to 417 level. Today we had earnings from Apple. Apple was up 4%, but closed the gap, reversed, and back to the 50-day moving average. So Apple is down as well. And earnings from Meta. Meta continues to grind higher, and Tesla also positive results and trying to break through this uptrend. So earnings so far look good. I mean, we have Google. I mean, we had results from Meta. I think Google is not going to change the course of trajectory of the market, and you can see Google is actually breaking out and continues to grind higher. So all eyes are NVIDIA. NVIDIA, you can see the correlation is lost right after the DeepSeek news. Fit and redeploy. For long-term holds, do you let winners run or take some profit and redeploy? I usually take some profit and redeploy. I do like position trading. So I have a core position. Questions from Joseph about long-term holding. So you can see some of my trades. I trade around a position often too. So if I like a certain stock or I want to have exposure to utilities, then I would hold one stock and just trade around it. But definitely if I see overhead, you can say NVIDIA is not making new lows. So if you have NVIDIA as a core position, okay, you can add to NVIDIA, right? And when it approaches 150, 145, then you would trim the position, right? But yeah, I always do position trading. So after DeepSeek discussion, right, this is kind of AI digestion. Basically, a lot of companies, spend a lot of money on the capex, right? Buying data centers and servers and chips and hiring people. But then the question is, does the investment into AI justifies the evaluations and the revenue? And you can clearly see an example of Google and Meta. It does, because there are more of a software companies, right? Or advertising, heavily dependent on consumer discretionary spend. And if you can build AI to improve your algorithms, then the company gets awarded, right? So Meta and Google would be the example of that. NVIDIA, where you're creating majority of semiconductors, and if AI algorithm, the inference algorithms improve, then potentially, $4 or $3 trillion evaluation for NVIDIA is not justified. And it did sell off. It's sitting at the 200-day moving average, and earnings are still in 26 days. It's underperforming, but you can see, I mean, semiconductors are trying to actually, kind of do better on the news. So semiconductors continue to outperform, and then not outperform, but off the 50 and 100-day moving average. And you can see technology in general as a sector already closed the gap for the miss in the earnings, but not earnings for the after the DeepSeek news. So, but the discussion is going to continue. Discussion is going to continue throughout the year, and for now, QQQ getting to the overbought levels, close the gap, and spiders. Let's go back to Ukraine. Let's go to spiders. Are at all-time high, right? So spiders retesting all-time high, overbought. This is the time to maybe consider trimming some of your positions, and small caps continue to also kind of consolidate. So looking ahead, right? If you look at the positioning for spiders, right? Let's look at February and March, right? So we're going to look at February and March. That's the time intro. And even if you're not an option trader, I would still use some of the option tools to help you with positioning. Because even if you're a stock trader, you kind of want to know, well, what are the different scenarios, right? Trading is about statistics, right? You have distribution of certain outcomes, and you have an opinion of which way the market can go. But 70% of the time, market is probably going to reach 620, 625 between Q1. If all stars align and earnings continue to have positive surprise, then it's a pattern of higher highs and higher lows. 620, 625. On the downside, we could revisit the year-to-date low, right around 585, 590 level. Not a lot of positioning. You can see there's not a lot of gamma position, but at 620, you do see a pretty sharp position where people are, start buying, selling. I mean, these are calls, predominantly calls. So these are people are selling calls with the idea that market is not going to go above 620, 625 by end of February, end of March. So those are the two different out scenarios based on geopolitical risk, the new administration, the tariffs, the inflation data, and the earnings. So okay, so then this is usually the exercise we do during live trading room, and I would encourage you to do it during when you trade, just kind of to look at different scenarios. And again, you have. One scenario we just traded, it's a triple top. 1, 2, 3, we fail and we retreat back to, year-to-date low, right? So scenario number 1, we're actually going to break through this level, right? We still have earnings from Google, from NVIDIA, and if Google, NVIDIA earnings are great, then this is that 620, 625 area, that one standard deviation, right? So I would say 70% of the time, right? 70% of the time, 67% of the time. On positive news, Q1, we end up 620, 623. On the negative news, we revisit 580, right? If it's stronger, then it's further down. So 70% of the time, we trade in between 610 and 580. And then scenario number 3, we are trading lower, right? 2 standard deviation move. Maybe, if over the weekend, Trump administration decides to impose 25% tariffs on Canada and Mexico across the board, right? That would be net inflationary, right? The interest rates most likely will go up and the market will go down, right? And that could cause a sharp pullback in the market, right? So then you have scenario number 3. If they're able to negotiate, right, and this is just a negotiation technique, and they maybe just impose on aluminum and steel, right, only, right, then I think it's just short-term pullback. Or if there's no tariffs, I think market continues to go higher. So you basically have 3 different scenarios, 3 different outcomes you can consider. So scenario number 1, we're trading higher, breaking out to new all-time highs around 625. Scenario number 2, we are, end of the earnings season. What is the next positive catalyst? And then we're just trading sideways. And scenario number 3, we see some recessionary pressures or inflation come back, right? Either hyperinflation, stagflation, or recession. Any of these symptoms could cause the market to pull back to 200-day moving average. So this is an important exercise to help you determine not only direction and the range, but also the position size. Because if you set 3 I would propose to raise cash, right? If you said 1, I propose to deploy cash, and and if you said 2, then I would propose to raise cash, because if it drops to 580 and 590, you want to redeploy your funds. Any questions? So down 2. Okay, how many you say 2? We're trading sideways. We're not going to break new highs. No positive catalyst left. Mark 1. Okay, Mark. We continue going higher. Andrei, BJ, Don, Horizon Scanner. What do you guys think? Mark, Paris, Peter. So 2, 2, 2. Half of the people said 2, half of the people said 1 short term. I mean, I'm talking about Q1, right? February, March. I'm going to go with 1. I think, February is usually volatile, so I don't think it's a straight line. I mean, we could have something like this, but I think we're still going to take out the highs in Q1. Take out the one. Whether it's February and March, we'll see. March is usually bullish time of the year, right? If you look at the seasonality, we can look at the seasonality. I mean, let's look at the model. 6 months model actually on Tradespoon. 6 months model is positive, but you can see the momentum is 6 months. Momentum is deteriorating 3%, right? Model predicted 604 for the months of January. By 586, we were at 575, and now it's 610. So it sees the momentum potentially reaching 620, 630 in the next couple of months. So model is bullish on the market and basically saying it's a pattern of higher highs and higher lows, although albeit momentum is deteriorating. So Andre, BJ1. All right. So I still think it's a pattern of higher highs, higher lows, but again, a lot of unknowns and the risk. And if you look at the seasonality, let's see. I mean, February is volatile, right? 2024, it was up 5%. During recession, it was down 2%. But even in 2020, it was down 8%. 2018, it was down 4%, right? So it could be volatile, right? It could be volatile, February, right? Usually, March is a strong time of the year. If you don't have recession like in 2020 or COVID, right? If you don't have COVID, then this is COVID, right? So outside of COVID, I mean, we had 22 and 23 also. We had recessionary pressures, so it could be volatile. I mean, the bottom line, it could be volatile. Any questions on the positioning? What do we have today? We had PCE data today come in as expected. PCE over year come in was expected. So data comes in as expected. And next week, in manufacturing data, job openings, ISM data. I don't think it's anything that can move the needle next week. So how do we help at Tradespoon? We do have different tools, stock forecast toolbox, right? We just went over that. We also have Elite Circle. So Elite Circle is where you can actually see all of the orders and positions, right? So today, let's look at Elite Orders. I just actually finished the live trading room. Let's see some of the examples from recent history. So Microsoft, right? I did Microsoft, taking advantage of option volatility in iron, doing the either iron counter. Sometimes I do calendar spread. This is an example of a put spread. So I closed at 275. This was a losing trade because Microsoft actually did drop to 422, 417 level. So I took the loss. Apple, this is an example of a calendar spread where I actually was a profitable trade, closed it for $1.44. Tesla, So I'm trading around Tesla position, right? Close the put spread, still have a stock position, and add it to SRE. So you kind of have a mixture of both stock trades and option trades, right? I do both. Some of it around the earnings, Apple, Microsoft, General Motors is another example. Some of them just around stock position like Tesla, SRE, and others. Netflix, right? I trimmed Netflix position to this week as well. So those are example of both stock and option trades, and you can find them in Elite Circle. Elite Circle, you can participate in live trading room, morning bell and closing bell. We partner with Keith from Options Hotline, that is an ex-market maker, spent a lot of time learning about options. He has a lot of background in mathematics, and he's an expert option trader. So you can see him in the morning bell and closing bell, and then between him and I, we're managing these broadcasts and also portfolios, right? So morning bell, closing bell, you can watch the recordings, and you can get SMS alerts every time you trade. Any questions about that? So that's Elite Circle. We also have a different signals. So what do I usually trade in a live trading room? These are the models, right? AI models that make predictions for, if you're active short-term trader, if you're more of a momentum swing trader, weekly trader, or if you're kind of a more of a long-term investor, maybe monthly trader. And the idea, you're holding this for a few days, this is a few weeks, and this is, a few months. And you can find these signals here under active trader. Let's click here. So today you can see healthcare has been doing relatively well, right? You can see healthcare is performing. So you have healthcare breaking out, and you can see signals. So BDX is one of the signals. CME is another signal from today, and EXC, the utility. So how do you trade this? It gives you suggested entry price based on market conditions. If the futures are up pre-market, then you would use 248.49 or predicted low. In both cases, in this example, it's the same number. In here, they're different, right? Predicted low sometimes different from yesterday's close. So those are the entry points, and then the idea is to risk less than 1%, right? So here you buy in at 248 and you stop out at 246. So 1%, $2.50. And also gain 2.5%, 1%, $2.50. And the idea is to break the trades into two, right? That you always trade with no more than 4 active positions with maximum exposure of 2.5% of account value per position. So that's active trader. And again, if you don't want to take $2.50 risk using stock, you can do $2.50 risk using options, right? So if we have weekly options, we'll suggest weekly options. If we don't have weekly options, we'll suggest monthly. So, but same idea. Instead of buying at 248.50, you buy three. You're risking $3.50, but you buy in February monthly expiration, right? In the money call. But the idea is still risking $2.50. If you buy at $3.50 and it drops to $1, you're out. And if you buy it at $3.50 and it jumps at $5.95, you're also out. Not to risk more than, in this case, 1%, which is $2.50. So whether you trade in stock or options, the idea is that you're always limiting your losses to 2.5%. Of your account value, right? And in this example, it's 1%, right? If you're doing short-term trading, if you're doing weekly trader, right? So weekly trader published on Fridays, signals published on Fridays. So we have Microsoft, we have KRE, and Netflix, right? And I traded Netflix. So same thing, you buy at 977, and then if it reaches 997, consider trimming. And that's an example of where I got that Netflix trade. Any questions on active trader, weekly trader, and monthly trader? So we have a tools membership where you can sign up for these models and get AI signals, but then you have to manage them yourself. If you want to participate, and ask questions about this model, then Elite Circle, right? You can sign up for Elite Circle. If you're only interested in stock trades, we have Robo Investor. If you're only interested in option spreads, very popular. Strategy Premium is where only trades option spreads. And we also have different tools, right? So like in research, we have seasonality chart, 75% correlation, higher. I mean, February, volatile months, right? Usually volatile months, but still pattern of higher highs and higher lows. Or you can look at the probability calculator. Basically, it tells you, yeah, our prediction is that it's a higher highs and higher lows right now, and we're trading between 596 and 615, right, in the next 50 days. So that's probability calculator and also seasonal chart. And there are a lot of free content. YouTube channel, we have a live broadcast of live trading room every Wednesday. You can sign up for YouTube channel. We have all of the events get recording. So if you want to learn, right, you can go to Active Investor option workshop, type in option if you want to learn about options, and you'll be able to, learn about options. Same thing, Strategy Roundtable or newsletter. So we do have, I encourage you to sign up for info@tradespoon.com. Add info@tradespoon.com to your email provider so you can actually get emails and be able to send, to read our market commentary. We have a blog that we publish every week that comes out on Monday. Then we have a video blog that comes out every Tuesday, 5-minute video, and then RoboStreet every Friday. So a lot of newsletters, a lot of content, trade ideas, and this is all free content, free education. All of this is free content, which I encourage you to sign up for. Any questions on any sectors? What else is interesting? Bitcoin. I mean, Nvidia is under pressure after the DeepSeek news, so it's still digested. No new signal. It's not making new lows. It's kind of consolidating, so that's positive. Google is breaking out. That's a strong signal we identified this week. What else? QQQ is closed the gap. Spiders, all-time high, and then small caps continue to grind higher. And then equal weight S&P also continues to slowly grind higher. Any questions? With gold and silver. So gold has recovered. So it's close to the all-time high. It's actually breaking out. So gold continues to go higher. I mean, there's still uncertainty in the market about the inflation. Silver also kind of rallied on pullback in interest rates. Try to make sense of the dollar going higher at the same time as gold and all-time high and SP out of breakout BJ. So there's still fear in the market, right, in terms of inflation, right? And you can see 10-year yield, there's really no new signal. It's vertical move to the upside in yield, vertical move in dollar since October, since the odds of red wave has started to increase. Starting in October, it's been a one-way trade where the dollar, the yield continues to go higher. And you see that globally, if you look at Germany, their industrial production is down and they're basically in recession, right? Multiple quarters of negative GDP. So Europe is in trouble. China is kind of not, able to get some traction. So the only place to hide right now is in US economy and US equity, and this is one of the reasons the dollar is strong. The other reason is that inflationary pressure, right? If over the weekend the new administration imposes 25% tariffs on Mexico and Canada across the board, across all products, then the dollar will continue to go higher and interest rates will continue to go higher because of the inflationary pressures. So BJ, let me know if that makes sense. And this is why one of the reasons that gold continues to grind higher last year, and it looks like this year is no different, right? That the gold is trying to break out. So that trade is also back on. Any questions? Joseph, BJ, Kevin, thank you. BJ, thank you. So today, obviously, technology is a shining sector together with semiconductors, trying to close the gap. Semiconductors are up 2.5%. All right, any other questions? Some of the trades from today. Now watching Visa, right? It's kind of in the middle of range, 350 strikes. Intel has been volatile up and down 1%, was as high as almost 21 pre-market. Microsoft is struggling, right? It's struggling to reclaim even session high, so that's down. General Motors continues to be volatile, so it's kind of still trading in the middle of the range. JP Morgan is up. You have a strong performance in Google. Google is breaking out. Twilio is breaking out. Netflix, you have Netflix move up in Netflix. Amazon is up 2%. Texas Instrument is up 1.5%. In terms of sectors, let's see how we did. What is the long term? I mean, you have strong rebound in materials in 2025 from oversold conditions. You have strong rebound in home builders, again, on pullback in interest rates. China, one of the better performing sectors, right? And this year also looks like trying to rebound. Industrials and strong uptrend in 2025. That trade works. REITs are strong uptrend. That trade is still working. Healthcare, strong performance in healthcare. Biotech is 80 cents, down up 80 basis points. REITs are up 60 basis points. All right, any other questions? About Tradespoon, some of the tools that I covered, Elite Circle or Robo Investor or Shadow Trading is basically Elite Circle, but no AI signals. You have your AI signals based on duration and free content. From China, DeepSeek will eat USA dinner. Yeah, I think DeepSeek conversation, I believe in US innovation. So if China was able to come up with the better algorithms for inference, United States is going to come up with even better algorithm shortly after, right? So I don't think this is this is kind of, a long-term trend, right? But longer-term trend, you know that the cost of the hardware goes down, and you know that performance of algorithms improve, right? We talked about chess game yesterday when the Deep Blue beat Garry Kasparov, right, 20 years ago. And back then it was the supercomputers that had to do billion computations. Now you have these AI algorithms that they don't have to make billions of iterations. They can make few million iterations and learn on the data in a lot more efficient manner that requires less electricity and less servers and data centers. So that trend has been on since the invention of computers, right? So, and it accelerates, obviously, it's accelerating. And that acceleration is going to continue. And China is probably not going to lead that acceleration. It's going to be in the United States, at least for now. All right. Reading scores are continue to deteriorate in the United States schools. So hopefully we can do something about the math test and reading tests for our kids. But other than that, we're in good shape. All right, that's all I have for today. Thank you very much. Have a great day, and I will see you guys at the closing bell. Thank you.